How's everybody doing, man? Let's go. Hope everybody's doing well. I'm excited to do some live trading on YouTube. I think I'm gonna do 1 or 2 of these a week on YouTube. The rest will be in the academy in the Discord, for academy members. But I want to be leaning into the YouTube stuff more. You know, you guys are family on YouTube. I want to make sure that I'm getting content out there. I also plan on doing 1 YouTube video per week. That's the goal. So 1 long form YouTube video as well, with a ton of value in it as well. Claudia, how we doing? Hello, mini. Share your view on gold. I got you. I'll check out gold in a second. Just want to make sure all my stuff's set up. I'm a bit late to the charts. We do have some red folder in the afternoon today, right? Wednesday FOMC. So price may want to hold up for FOMC. Everything starts with the economic calendar. You know, you guys hear me talk about this all the time. I'm going to show the charts in 1 second. So we have FOMC meeting minutes at 2 p.m. Zaru, what's up? Chandra, how we doing? How we doing? I am just getting something set up really quickly, and then I'll be right into the charts. All right, so we're kicking it off this week. Live trading on YouTube. How we doing? How's everybody doing, man? So you guys know I'm trading Harmony. Harmony is my personal model. It's what I use to trade indices. I focus on purely ES and NQ. I use them in tangent with each other. So I'm always looking at it like this, side to side. 1 screen, you know, I only need 1 monitor. My other monitor literally has you guys over here, right? So I'm just looking at the chat on the left, and then I have 1 screen with ES and NQ, and I'm just watching them move. I'm trading when they move in harmony. You know, I want to see them agree with each other. I want to see clarity. I want to see my boxes for a model get checked. So we'll talk about what that means. But today, like I said, we'll see how price books. It may want to hold up for FOMC at 2 p.m. I'm going to make a quick post on my Instagram as well that I'm live, and then we'll be good to go. And then we'll walk through my analysis and what we're thinking for today. Dun, 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 dun. Where is... I'm trying to post this on Instagram really quick, and then we'll get it going. I always have to do this at the beginning. I swear I always have to do this at the beginning. Okay. Telling the Instagram family I'm live. Link. Live now. Boom. Okay, sorry guys. Wanted to make that post really quick. Okay. How we doing, Adrian, man? How's it going, brother? Ahmed, share the screen. I am sharing the screen. Maybe you said that before I was showing it. I got my matcha. I switched off coffee. I'm off the coffee wave. I am officially on the matcha wave. Okay, I'm on the matcha wave. We're off coffee now, 2025. All right, let's talk about what we're seeing. I'll check out gold for you as well. But let me start working my way through indices. All-time highs as my draw. We called this. We talked about this. You guys can fact check me. We've said it in the Discord. We've been bullish on indices throughout all the consolidation. Throughout all of this, we've been looking at an all-time high draw. You can check the forecast last week. I don't want to, be egotistical. I don't want to sound like a jerk or anything, but we did call this candle right here to the tick in the forecast. I will say that. I got to give myself the pat on the back. We said sweep this high, work its way back into the range, and then expand towards all-time highs off this daily gap. So this candle right now is looking very bearish, which is interesting. We might just mess around in here. I'm still ultimately looking for these highs to go. I'm still bullish biased. I'm still looking for buy side to go. We're respecting this daily BISI. NQ has a daily BISI down here as well. I was expecting this to get left open based on this delivery right here. And so my eyes are on the buy side. But as of right now, just looking at this daily candle, we know the middle time frames, the intermediate time frames, whatever you want to call them, are looking bearish, right? So if I drop into the 4 hour and 1 hour, well, the 4 hour is looking very bearish. We have a 4 hour SIBI forming right here. 1 hour is definitely bearish order flow. And so right now we don't have these intermediate time frames on our side for longs. And so that tells me, okay, what is price looking to do right now? Where can we head higher from? Well, right now, it's very unclear to me what price wants to do. And what makes the most sense is really just a failure swing and then the order flow to flip again. But we have FOMC at 2 p.m. So that's really going to provide the clarity. Just looking at this right now, I really don't like where indices are at. Right? We do have this low and this low as well that I guess we could run. Right? If we wanted to run these previous day lows and then expand off of that, that's possible. But I think a failure swing is more likely. We'll see how this. We're kind of like in no man's land, in my opinion. We do have the daily BISI down here. So if NQ wants this, then ES is going to run previous day low. If it wants to do this first. But I really wanted to just see NQ breakaway gap and higher prices here. But yeah, this is very bearish intermediate time frame order flow. So the middle time frames are really pointing lower at this point. When I'm framing longs, I want to see the 1 hour, I want to see the 4 hour, I want to see the 15 minute. These intermediate time frames agree and point. These are our compass. And so where these time frames are pointing is very, very telling of what price is trying to do, what the daily objective is. Essentially, all we're doing every day with Harmony, and when we're trading ES and NQ specifically, the model that I trade, I'm identifying the daily candle direction. What are the targets on the day? What is this daily candle reaching for? Are we reaching for in the most easy targets to mark out is, are we reaching for previous day high or previous day low? Once that occurs, if we expand through previous day high, okay, what's the next buy side objective we're looking for? But previous day high and previous day low are the most low hanging fruit, easy objectives to target with this model. That gives you your bias. And then the 1 hour, 15 minute, 4 hour, etc. These confirm the idea of us expanding towards those targets. So you can see here is ES and NQ didn't sweep previous day high. We actually failure swung right here. Now we're getting very bearish candles into FOMC. So for me right now, we're really in no man's land. Like I said, perhaps we run previous day low, sweep this candle to work higher, but it's really not looking hot. I'm going to be honest here. I haven't even looked at the charts since yesterday. You guys know me. I'm very, very strict about when I look at charts. I show up, I look at the charts at like 9:30, and then I just get off at 12 because I'm very invested in my mental health, not only off the charts but on the charts, because I need to have that energy to trade. I need to have that mental capital, right? Mental capital is very, very important. And so for me, being strict about when I'm trading and when I'm not, and not overindulging myself in these markets, is very, very important for me to execute on my best. So we're just expanding lower. We have 15-minute SIBI being respected by price. We're kind of just consolidating right here. Do we expand through this low or not? Let's see right here. On the 15-minute sell side, do we wick this and respect it? If that's the case, then I'm just expecting continued chop right now. Continued consolidation on the 15-minute. What do we see on ES? Consolidation, right? So this is what tends to happen. You guys hear me say this all the time to you guys. When there's a big 3 news driver, price is likely to hold up for it. Price tends to wait up for it, right? So I even said in the forecast, we're likely to get our best trade. I haven't taken a trade yet this week, by the way. We're likely to get our best trades on Thursday and Friday this week, because FOMC is at 2 p.m. on Wednesday, and price can hold up for that. You know, this was all pulled from the weekly calendar before we even got into this week. You guys can go watch back that forecast. A lot of the stuff that I was anticipating is playing out, because the economic calendar tells all. And so yeah, right now we're sweeping this low. It's just very low probability conditions. In terms of the higher time frame, we're in no man's land for me. There's no PD arrays for me to give me a clear draw or bias right now. The 15-minute is just consolidating. So this is very, very low probability conditions. I can say that confidently. There is nothing here that I want to put risk on for right now. You know, I want to see a clear draw. I really don't feel like I have that at the moment. In terms of PD arrays, yes, we can go and frame a 15-minute PD array, but it's extremely low probability because where price is expanding right now is unclear to me. I think it's just waiting up and consolidating prior to FOMC meeting minutes. And so framing this narrative is extremely important. You need to be able to frame a narrative going into every week. And it's just testament to what I teach you guys, because you guys are seeing, if you go and watch back that weekly forecast that is going to be the live under this one, you'll see a lot of the things that I was anticipating have been playing out. You know, the daily candle delivery, the way this weekly is going to deliver, holding up for FOMC meeting minutes. You know, we'll see how the rest of this session plays out, but I'm expecting a low probability consolidation type of profile here for this session. Sweeping this low, working back into the range. There's just nothing here for me, right? This is no man's land. We're within this 4-hour range. I'm still bullish overall from a macro perspective. Right, so it's very, very important to identify where price is going on the higher time frame, what the higher time frame trend is in order flow. And from there, you know, okay, well, if I'm from a macro perspective, if I'm bullish on indices towards all-time highs, how are we going to deliver there? You know, frame the narrative beyond that. Okay, if we're going higher, we can sweep this previous day low candle and work higher. Or NQ can offer fair value all the way towards here and expand higher off that. Because the intermediate time frames right now, what are they doing? They're pointing lower. But do you guys see how I used every time frame as a compass for the ones above it? That's literally the most important skill and thing that I can teach you guys. It's something that I focus and talk about on all the time in the academy. You know, I talk about using the time frames below the one you're on as a compass, reading the fair value gaps, because everything that I do is built around fair value gaps and swing points, reading where the gaps are pointing, identifying where price is drawing to. Is it seeking liquidity or offering fair value? Just in no man's land. There's no other way for me to put it other than we're in no man's land, consolidating on the 15-minute. But we're a clear order flow to see you would trade. Correct. Yes. Good question. So if price was very clear to me, Claudia, and it was showing intention, by that I mean creating fair value gaps, right? So look at the 15-minute right now. We did have a small fair value gap here, but at this point we're just consolidating in this range. If we objectively look at price from 8:30 to now, we've literally just consolidated. And so price is not showing any intention or willingness to want to expand. And also, it's unclear to me right now, right? It's unclear to me what price wants to do because we're just chilling in no man's land. I don't see a clear PD array for us to head higher off of other than previous day low or this daily BISI right here. But that feels like a deep pullback for me, and so we're just really in no man's land, and I'd just be waiting, right? The reality of trading is there's going to be many times that you feel like you don't know what price wants to do, and when that's the case, you know it's lower probability. My highest probability trading, the highest probability trading conditions for me, to put this very simply, is fair value gaps on the higher time frame, and it feels extremely obvious where price is reaching to. That's the best way I can explain high probability conditions. So for example, a very high probability condition for me is internal to external, where I have a context to frame longs out of, and it feels super obvious. Okay, price is bullish on the daily. Price is bullish on the daily. Now we have a bullish fair value up here, and now we have this internal to external context. Whoops, right here. Okay, so just picture this as daily order flow. Price trades into the daily bullish fair value gap. Now we have this context to operate in. Within this gray line and this gray box is our context to frame our trades within. From here to here, we have a very clear draw on liquidity. So this is high probability trading conditions for me. This window right here, from here to here, that is high probability trading conditions. Having a clear context on the higher time frame and a very clear draw. If we go and look at indices right now, that really isn't the case. From here to there, we had already swept previous day high, and I wanted to just see more buy side expansion from here, but now we're having this pullback. So it's just no man's land. If you look at the 4 hour, we're not respecting internal of this 4 hour leg. And so your eyes go to the next objective, the next discount array that we can potentially trade off of. And so that would be previous day low. That's really the only thing, and we're just in no man's land. So FOMC meeting minutes will provide some clarity, ideally. But the next discount arrays I see on the daily for NQ, do you guys see how simple this is? I'm seeing what the 4 hour and 1 hour are doing, where they're pointing, what the fair value gaps are pointing towards, and then I'm asking myself, okay, what is the next target? Previous day low or this BISI? Simple. ES has a 4 hour SIBI. I really wouldn't want to see price retrace all the way up here to go lower. If price was trading to this 4 hour SIBI, I'd be expecting it to go higher, and this just be a failure swing, because I am, from a macro perspective, still bullish on indices. But I just really don't like where we're at right now. I'm very picky with price right now. Q1, I think it's extremely important to pick your shots well. And so I've been trading less than normal, but you guys will also see me press the gas and be trading pretty much every day when things get cleaner. There was a trade yesterday for Harmony, but the entry was at like 12:05 or something. And so it's outside of my window. I'm very strict with that. 9:30 to 12. Because if I start breaking rules, all right, well, now I can trade from 12 to 1. Okay, well, at that point, why don't I just trade 1:30 to 4? And then boom, it creates these bad habits for me where I'm allowing myself to trade anytime, and then boom, the mental capital goes. Do you see how breaking your rules, it's just going to create bad habits that will that habit specifically of operating outside of my window will cause me to overindulge in the markets, which will in turn affect my execution, affect my trading performance. So I'm very strict about my time window, 9:30 to 12, because I know, and I've back tested that window, that 9 to 11 window. I'm not showing up at 9, but you guys get what I'm trying to say. That window of time from like 9:30 to 11 is where I'm getting my setups majority of the time. Very rarely is it like later before 12. It happens, but more often than not, it's like that 9:30, 10 to 11 type window. So I'm very strict about that. For those of you that aren't as like quick with analysis or getting on side with the charts, need more chart time, maybe show up to the charts 30 minutes early and just get a feel for where price is going. For me, like what I've been doing, to be honest, is just showing up right around 9:30, because as soon as I get on the charts, it's going to feel obvious to me where price is going. And if it's not obvious to me where price is going, I'm not trading it. That's it. I show up, it needs to feel obvious where price wants to go. Then I wait for my boxes to be checked with Harmony. You give the correct name. It's very impressive. Thank you. I don't know. I'm a bit confused about the correct name part, but thank you. I appreciate you calling me impressive. That's a great compliment. Claudia, I know you're working your way through the course content, so let me know if you have any questions or issues. I would try watching it on Google Drive app or a different browser if it's not loading for you. I know you wanted to get them slower. The rules are the pillar. Absolutely. The rules are the pillar. Very, very important. Rules are put in place for a reason. They protect us from our bad habits. They protect us from our flaws as traders. And so the rules that you guys build for yourselves should be personal to you. You guys hear me talk about this word, this phrase, make trading personal to you, right? For those of you that watch me and my content, you hear me say it all the time. Make your model, make your trading personal to you. That is the most important thing I think nobody talks about. A very, very minuscule amount of people talk about that. Making trading personal to you. It's always do this, do this, do this. This is how I make money. You do it too. It's not that rigid. It's not that black and white. It needs to be, what are your tendencies as a person? What are your flaws as a person? Okay, what resonates with you when you look at the charts? Do fair value gaps? Do order blocks? Does liquidity resonate to you? Okay, what are your flaws with them? What do you dislike about them? What are the things that you struggle with as a trader, and how can you suppress them with your model? How can you suppress them with your rules? Right? That is very, very important things that nobody talks about. And so for me, that 9:30 to 12 rule is something that suppresses, bad habits, overindulging in the markets. That's going to create bad performance and poor execution on my end, because I'm not interested in being at the charts all day long. And if I allow myself to break those rules and operate out of my window, well, then I might as well just trade all of PM session every day, and then I'm at the charts for 8 hours a day, right? So that stuff is very, very important. I'm strict and very rigid about my rules. The rigidness, though, like, not to go on a rant here, but the rigidness was something I actually struggled with. Being too rigid was something I struggled with. So you can be on one end of the curve where you just break all your rules and you're not disciplined, and that's I would argue that's the majority of traders. They lack discipline. For me, I'm very disciplined in other areas of my life as well, the gym, diet, etc. And so the over rigidness for me was an issue, and I had to get myself to lean into my understanding of price, because I think when you're pressing the buttons as a human being, there's no way around that level of discretion. But yeah, there's just nothing to be had right now. I'm not interested in framing anything in this consolidation. And to be honest, the fact that there was FOMC for price to hold up to was a big indicator. We talked about this, potentially seeing price want to hold up for that FOMC on Wednesday. Do you mind looking at gold? Sorry about that. Yeah, I forgot. I can definitely look at gold for you. Will you do a stream every week on YouTube? Yeah, I'm planning on doing 1 or 2 live trading streams every week on YouTube, and then the rest will all be for the Academy members in the Discord. But yeah, this is really just a look at what it's like in the Academy. I do this almost every single day. I'm obviously a human, and I have things come up, and I'm not able to stream every day because I'm not a robot. But I can, do it almost every day of the week, and then probably one day or maybe 2 days a week I'll do the YouTube live streams, because I really want to focus on building a relationship with you guys on YouTube. Okay, you guys want me to look at gold? I got you. I'm a people pleaser. There's not much to be had on indices. Let me walk you through top down. Let me walk you through this. The very first thing that I do is identify the order flow on the monthly time frame. The trend is your friend. The macro perspective, that's going to tell all. What is this? You can ask your little cousin, your little daughter, sister, whatever, niece, what is this doing? It's going up, right? This is a clear uptrend, bullish order flow. Bullish fair value gaps are being respected by price. Price is creating new bullish fair value gaps. This is bullish order flow. So this area here is our area of fair value, but price is showing zero intention to want to retrace to this right now. We've already began to expand higher. So what does that tell you? Price doesn't want to retrace and offer fair value at this moment. Look at the weekly now, bullish order flow. So we have the monthly and weekly bullish, both bullish. Weekly creating a breakaway gap. Previous week high to me is the low hanging fruit draw. So this all-time high right here, I believe that's all-time highs. It's got to be. Yep. This previous week all-time high on gold is my low hanging fruit draw. We're kind of just consolidating, which is what we tend to do in all-time high markets. We consolidate and then we expand again. Consolidate, expand again. So it's just accumulation at highs. But I would be looking at the buy side objectives right here. It looks like we swept this high and we're consolidating right now. I don't like where gold's at. Again, I don't like where gold's at. What I would want to see is new fair value gaps higher, reaching towards this buy side, and potentially longs there towards that buy side. But I really don't like where it's at. We just swept this high. We're consolidating. We want a clear narrative PD rate along off of, right? So we want something clear that we can frame longs off of. We don't have that right now. And actually the 1 hour order flow is creating a bearish fair value gap that's being respected by price right now. So you don't even have that intermediate compass time frame pointing towards higher. So best case scenario for longs, I'd want to see this flip and then create 1 hour or 15-minute fair value gaps through that, and then long towards the buy side right here. We're very, very close to that previous week high objective. So perhaps we get a push later today, but right now we're just consolidating. I wouldn't want to touch gold at the moment. I think this is a very low probability stage of price right here. We just swept this swing high right here, this buy side, and we're just consolidating. The 1 hour flipped, created a bearish SIBI. Not a high probability trade to frame on gold right now, in my opinion. What I talked about before about my highest probability trading conditions is super important to understand. Operating within a context, right? We're creating essentially a boundary from fair value gap to the liquidity, right? Either a previous candle high or a swing high. So just hypothetically, and even still, this buy side draw is a nice context to operate in. But hypothetically, let's say we tag this internal. That to me, from this bullish fair value gap to the weekly previous candle high right here, that buy side is an extremely high probability trading condition. This is a context to operate in. And so from there, once we trade into this weekly gap, I'm looking for the 4 hour to flip and then a buy model to engage on the 4 hour. And so from here to there is the boundary we want to be operating within, looking for a 4 hour buy model to play out. So assume we tagged into that and we didn't failure swing there. We're looking for 4 hour bullish order flow to respect, and we're longing these discount arrays, these internal range liquidities or swing points. But everything that I do is built around liquidity and fair value gaps. I don't need anything else. I truly don't. So I don't love gold right now. All that to say, I really don't like gold right now. I would be waiting. Ideally want to frame longs on gold. You know, we're getting a bit of lower push on NQ. Previous day low is my draw. Based on what this order flow is saying right now, based on what price action is telling me, we are expanding lower. You know, of course, it's very, very obvious that we're expanding lower. Where can we find support? Where can we respect a discount array? Previous day low if we expand through previous day low, and then I'm looking for price to offer fair value at this leg right here, because NQ has yet to do that. The previous day low is my draw right now. If we can get some expansion here, we could potentially frame something towards this low right here. $15-minute SIBI respecting my price. NQ looks a lot weaker at the moment. Perhaps it's because it's just the more volatile of the two. But right now we're showing more intention to move lower on NQ. There was this right here. This stop hunt with the SMT was very telling. This is why I love SMT on ES and NQ. Super, super telling. What I didn't like about this is we're in no man's land here. 1. 2, we have FOMC meeting minutes. And so it would not surprise me if we just work back into the range. You know, ES is just consolidating. And right here, we've just been consolidating the entire session. It would not surprise me if price wants to just mess around for FOMC. But I just want to see if this entry was buttery or not. Buttery. Here's our stop hunt. Yeah, that was pretty nice on NQ, not gonna lie. Interestingly though, NQ created the higher high, whereas this created the failure swing. But I would argue NQ is the better trade. NQ in general, when you're on side with NQ, is just so nice and rewarding because of that volatility. But the opposite can be true as well. When you're offside on NQ, you're probably going to get your stop hit very, very quickly, and NQ can tend to be a bit more sweepy. And by sweepy, I mean it takes legs. It will sweep its legs a lot more. So like right here. The NQ entry was pretty nice though, right? We have the order fill flip right here. So this is an example of harmony, but I'm picking and choosing my battles. I'm not looking to frame trades in consolidation. And so I'm waiting for it to be clear to me what price wants to do. At the moment in this morning, it really wasn't, it did not feel clear that price wants to reach all the way for previous day low yet. And so for me, my boxes weren't checked. It didn't feel clear to me about price. In terms of a narrative PD array with SMT, right, I need to see external or internal as my higher time frame PD array, my narrative PD array, to frame a short off of. And so this was nice, but I don't have all my boxes checked. I'm waiting. I'm always waiting for very, very clear price action to see, okay, this is the obvious objective price is reaching for. You know, and at the time, didn't have that. We're also consolidating in here prior to FOMC. So I'm building a narrative. ES is still showing a lack to move lower in wicking right now. Just low probability. Framing trades in this consolidation is not something I'm interested in doing right now. Fair value is buyers and sellers, right? So fair value is giving buyers or sellers a fair chance to get involved in price action. So when we're talking about fair value areas and fair value, price is only ever doing one of two things. I teach all of this in the course, but we'll walk through it very briefly here. I'm always focused on current price legs, the most recent price legs. When we have energy in the markets, right? Strong moves, when we have displacement, institutions involved with price action, right? Big banks, big money, price creates fair value gaps. Price has energy. It shows intention is the word I like to use. When price has intention, it will be seen by fair value gaps. Fair value gaps equal intention. Okay? When price has intention, there will be fair value gaps. This is an imbalance of buyers and sellers, right? So this is a sell side imbalance, a SIBI, a bearish fair value gap. Price wants to pull back and offer fair value and offer buyers and sellers a fair chance to get involved before continuing lower potentially. So if we have a bearish trend and price offers fair value here, we're looking for it to head lower from here and seek liquidity because we've successfully offered fair value. So if price offers fair value successfully, hold on, let me make this clear for you guys. When price offers fair value successfully, we're expecting it to now seek liquidity, internal to external. So essentially what fair value is just offering willing buyers and sellers a fair chance to get involved. So, whoops. This right here is our area of fair value, where if we're going lower, I want to see it do so from here and target this external liquidity. So from internal to external. If we fail to offer fair value and just expand through this, then I'd actually look to target the buy side up here because we're failing to offer fair value. So then we're targeting the opposing liquidity. Price is only ever doing those two things. It's seeking liquidity or it's offering fair value. It's an area of overlapping rays. Yeah, it's going to be a fair value gap overlapping with something. An order block, a mitigation block. I don't need to label anything as that though. I just mark out gray line overlapping with fair value gap. Whether you want to call it, and identify them as breakers, mitigation blocks, order blocks. I don't subscribe to like wasting the brain points on that. What I teach is literally just identify the current leg, mark out the areas of interest. What is our area of fair value on the daily right now? It's this. So if price is offering fair value and we expand through previous day low, I would want to see it respect and wick this to then seek liquidity at this high because we're still bullish biased. NQ is showing some nice move here. NQ is the play, honestly, but framing it in this consolidation is tough. That's really hindsight because at the time this looked horrible and it wasn't clear. But in terms of the model, if it was clear, this would be a 15-minute narrative, right? External SMT with NQ to confirm it, then a move lower towards that previous day low draw. Here's your order flow flip. Order flow flip entry. I always like to have my stop above the high or the bodies. Ideally, this protected swing point. You could take the bodies if you want, like right here. Price should not run back towards these highs, right? They've already trapped liquidity here. So this should be a protected high, and we want to see price move lower. I just target 2R. So that's how I would enter these trades. But for me, all the boxes weren't checked. It didn't feel obvious to me where price wanted to go. And we're in a consolidation prior to FOMC meeting minutes. That's not something that I would be interested in. I need to see all my boxes checked for harmony. I need to see a clear draw on liquidity. I need to see a narrative PD array, which is going to be a fair value gap or swing point plus SMT. And then I need to see my entry function, which is going to be an order flow flip of some sort, whether that's a fair value gap out of the PD array or an order block. I'm only ever trading off, I guess, unmitigated things. I don't really throw around the term mitigated or and whatnot. But in terms of what I'm trading off of, it's always off of fresh PD arrays, so things that haven't been used. So if you want to call that unmitigated, yeah. I'm trading off of the most recent price legs and then fresh fair value gaps that haven't been used in that leg or swing points that haven't been used. When price does not tap the fair value gap, you take no trade, right? If there is no narrative PD ray, meaning if I don't have a tag of a swing point or a fair value gap, then I have no trade. I mean, this is a nice sell model on the 15-minute towards this previous day low. So if we do get here, I want to see and gauge how NQ reacts from this area. If we continue to expand lower, we should be offering fair value of this leg. So this daily fair value gap for me, this is an example of what I mean. When I'm trading, if I'm trading off of this, just assume that like it's a narrative PD ray, like on the 1 hour, 15-minute. I'm not trading off the daily gap anymore. I'm not trading off this gap. It's already been used. We've already tagged into it. To me, what I would be trading off of is this previous day low, this previous candle low. So this sell side liquidity is a swing point, right? So that's what I would be framing my trade off of. It's fresh. That's the new PD ray. I'd be framing a long off of. That's our discount array. This fair value gap to me has already been used. It's an important distinction to make. The only difference is the wait time on your trades and the execution time frame. The way you frame the trades is going to be the exact same. It's fractal. So if you're trading longer term, looking at weekly fair value gaps, you're going to be taking entries on the 4 hour and holding for significantly longer. You're going to be swinging. That's really the only difference. But those type of things tie right back into what I was saying before about figuring out your personality traits. ES is still consolidating. Just low probability session in my opinion. I mean, look at the 5-minute on ES. NQ's had more willingness to expand, right? Creation of fair value gaps on NQ versus a lack of fair value gaps on ES. And to me, NQ should still reach for this previous day low. If it doesn't, then it's just going to fail your swing and expand off of FOMC. But overall, from a macro perspective, I'm still bullish biased, which is why I'm asking myself, okay, where can we head higher from? What are the discount arrays that we can head higher from? Right now, price is just trading in no man's land. The matcha has been hitting. The matcha has been firing on all on all cylinders. And it doesn't mess with my stomach. It doesn't make me feel weird or anxious. I love it because there's less caffeine. I didn't even drink coffee for the caffeine. I drank coffee because I like to sip on something while I trade, and it tasted good. Low probability. Is there anything you guys would like me to look at? Let's look at crude oil. What did we say? What did we say in the forecast? This daily SIBI is going to fail. Why do we say that? Because it's a consolidation profile. Not all fair value gaps are created equal. This is the biggest turning point of fair value gap traders, internal and external traders. When you have an understanding of this, when fair value gap should hold, when they shouldn't, that is huge. I talk about this all the time as well. So we talked about why we believe this fair value gap wouldn't hold, why we think crude oil is extremely low probability, and why I wouldn't touch it. I think what I said verbatim was I wouldn't touch crude oil with a 100-yard pole or 20-yard pole, something like that. It was something along those lines. Because crude oil is extremely low probability, from the top down, what are we doing on the monthly? We're consolidating. We swept these highs, work back into the range. The weekly, we're trading into this BISI right here, sweeping previous week low and expanding. The daily, we're disrespecting this daily SIBI. Both fair value gaps on both ends are being disrespected by price, and we're just consolidating. So my next target is this buy side up here. I'm expecting price to continue higher towards this buy side objective, but I really don't like crude oil. I'm good on crude oil. Bitcoin, New Zealand dollar, CAD. Bitcoin as well. Period of consolidation. This is gross. This is what Bitcoin does though. It just like prints for like a month and then it just does this for a month. All of February has been straight chop. Oh, this is gross. This is why I don't touch crypto. If you want to invest in Bitcoin, you know, this is not investment advice, but if I was touching Bitcoin, it'd be investments, holding long term. I wouldn't be trading this. I'm not interested in trading this. Your smiles are crazy. I don't know how to feel. Hopefully that's a good crazy. Sell side, work back in the range. Consolidation profile, low probability. You see this and you're running a filtering process like this, immediate skip on the daily. Immediate skip. Don't even waste the brain points to make sense of it. Like I talked about, it goes back to preserving mental capital. Don't even waste the mental capital trying to make sense of this. EU and GU. My opinion on EU and GU is going to be contingent on what dollar's doing. Okay, so we failed this daily SIBI. Now we're trading into this SIBI, this overlapping area. This is a perfect example of an area of fair value. So this is our area. Whoops. This is our area of fair value right here. I want to see price respect that if we're going lower. And then seek this external right here. So from this area of fair value to that low is a high probability trading condition. And that will be a period of clarity on dollar. If we get a flip from here, then you have bearish dollar from this area of fair value to this low. That's when I would want to focus on majors. Okay, so if any of my students are watching right now, for those of you that have been asking about dollar, or anyone in the Discord, I've seen a bunch of questions about dollar and trading majors. I will only trade majors when dollar is extremely clear. This is our area of fair value. If we get a wick out of that, if we get a shift of order flow, high probability, clear order flow pointing lower, then you have clarity on dollar. And when you have that, you have this boundary to operate in. You have a clear draw to frame theses on these majors around. So I'm only trading majors when dollar is clear to me. So this daily is invalidated and our eyes go to that area of fair value. If we're going lower, we should offer fair value and respect this area here and seek this external, internal to external. This is a nice signature here for sell side. I love to see signatures like this in price. So if we get a flip, it could be really nice sell model. And then if you have bearish dollar, you're framing your trade theses on these majors around the direction of dollar. So if dollar is going to go lower, you'll be bullish UGU, AU, and NU. If dollar is going to go lower, you'll be bearish. CAD, CHF, yen. And they have some nice context forming. Wow, yen's been crazy weak still. Actually crazy. USD CHF 1 hour off entry. I'd be waiting to see what dollar does. Has dollar flipped? Dollar could be flipping. We also have FOMC. So if you're entering a 1 hour, I wouldn't be interested in holding through FOMC. That's a big 3 news driver. So what I would want to do is wait for FOMC to play out. Do we sweep this high and head lower off that, or do we just flip here and expand lower with FOMC? If that's the case, then you have clarity off FOMC and you can look for your swing entries. If there is no target, if there's no clear context, that is a lower probability trading condition. So like I just talked about, the highest probability trading condition is going to be internal to external, where there's a clear context. Okay, so if we have a pullback and we offer fair value of this, just assume we're on the daily. From here, this bullish fair value gap to that high is high probability trading conditions that you want to frame your trades within. But we've been lacking that. We've been lacking that for quite some time now on indices. There was a nice push the last couple of days, which is nice to see, and we could be working out of this range. So let's cross our fingers. Fingers crossed. We've been talking about this within the Discord. Just very low probability trading conditions. This previous day low is the next discount array I see for us to respect and head higher off of, unless we want to offer fair value of this leg right here. If that's the case, this is the next discount array after previous day low to head higher off of. I'm still bullish from a macro perspective. We're just in no man's land, like I talked about. So no man's land, consolidation prior to FOMC meeting minutes, low probability trading conditions. So Caterpie, if NQ begins to point higher, you know, or hypothetically, let's say we retested this and then we had this context to operate within, that is a high probability trading condition from here to here. And that's when you want to be focusing on longs this entire way through, because once that order flow flips, this buy side of the curve should be respected by price. So these fair value gaps and liquidity pools, right, sell side liquidity, should be respected on the way up towards that high, and that's a high probability trading condition. But indices are just in no man's land. Previous day low here. That's it. I don't really have much else to say about it other than I'd be waiting. And price tends to have clarity after these big 3 news drivers. So if you're going to frame a trade prior to a big 3 news driver, you need to be doing it intraday, and you need to be giving it that you deliver prior to it, right? So if I was going to be taking a trade today prior to FOMC, if things were clear to me, it'd be a 15-minute to 1 minute, ideally, because that's going to have the best chance of delivering before that news driver. I don't want to be holding trades through. We talk about it all the time. You know, you don't want to be holding through these news drivers. The big 3 news drivers. Let me correct myself. I'm fine holding through news drivers. News drivers give energy to price. They push price in the direction that it wants to go. I'm not fine with holding trades through news drivers that will slip me, that have too much volatility, that are dangerous, that can hurt my account because I can't manage risk. If I can't manage risk, then I'm just gambling. Your downside is always going to be assessed first. It's your shield. It's your ability to trade another day. And so if the news driver puts that or your trading capital in harm's way, there's no reason to ever hold a trade through it. That's gambling. If you can't manage risk through the news driver, which is FOMC, NFP, CPI, because they're so volatile, you should not be trading through it. You're gambling if you do that. Right? People gamble on NFP, FOMC, CPI. It's cool when you're on the right side of it, but when you're not, you can get slipped to hell. And if you're trading real capital, if you're trading funded accounts, it's a terrible idea. But yeah, I mean, we're just consolidating, unfortunately. I feel like every time I go live, this tends to happen for me. It's also just the market conditions and ES and NQ lately. Some of the days have been nice. Like last week we had some nice expansion days. Finally. But prior to that is just straight chop. So hopefully we can work out of this higher time frame consolidation and begin to see that all-time high draw we have. Yeah, if you guys haven't joined the Discord, man, hop in the Discord right now. I'm about to send the link right here. Also, I'm posting a new YouTube video this week, so stay tuned for that. I'm talking about the off entry model, order fill flips. That video will be uploaded most likely on Friday. And other than that, what else? I posted the weekly schedule. I'm planning on doing sessions in the Discord, back testing sessions, lectures, just, you know, interacting with you guys more. I really want to build a family. I'm invested in you guys and your journeys, so I think that that would be something really good to do and just more value for you guys. Just no man's land. 4 hours sweeping that candle low. ES has been trying to hold up, consolidating, right? NQ has been weaker, as we mentioned before. Low probability trading conditions, man. There is really nothing to frame trades around right now. We're just failure swinging at this point. Consolidation prior to FOMC, right? This is not something that surprises us. In fact, this is exactly what we were expecting. Killed the macho. So it's looking like continued chop until 2 p.m. for sure. Let's see if we sweep this swing high here. You guys see how I'm always looking for premium and discount arrays to frame a narrative off of. See what price does here. Just not interested in this session at all, to be honest with you guys. I'm really not. I don't like anything that I'm seeing out of price right now. Trading this type of condition consistently will burn your account. I'm not interested in consistently trading something like this. Can you please build a family, bro? With the Discord? Or like, or like, what do you mean by that? In the Discord? Yeah, that's the goal, man. That's truly the goal. Create a family of profitable traders in the Discord. Just very low probability conditions, man. Frustrating stuff, but you just have to pick your battles. I always like to give that analogy of archery. It really feels like I'm lining up my shots every day. I mean, look what we'd be framing this trade within. Okay. Totally agree. That's why I'm a watcher. Yeah, just picking your battles, knowing when to sit out, knowing what conditions to avoid, that is a superpower. I'm telling you, knowing when not to trade is a superpower. And not to plug the Discord, but I have here I look dark right now because my screen's not white. But if you look at the Discord, here, let me just plug this right here because I think there's a lot of value in here for you guys to be had. If you guys join the Discord, I'm live on YouTube right now. If you guys join the Discord and you go to the PDF access right here, I need to change this. There's way more PDFs than this now, so I'll have to change that later. But you click here, you will be able to get free PDF access. Literally all you need is a WAP account. It's completely free. What is in here is straight PDFs of value. I mean, look at this. Drawdown, knowing when not to trade, exactly what I just talked about. Power of 3, fair value gap secrets. There's just so much value in here. Just PDFs of straight value for free. So I don't know why you guys wouldn't be in the Discord. I don't know why you guys wouldn't take advantage of this. You know, there really is no excuse. It's free value. This is free PDFs. You know, it's just on you guys to study. That's it. There's just so much value in the Discord, man. There's so much value. Free course, free PDFs, free resources, analysis. Like I don't know what else I can do. I'm giving it all away. I'm giving it all away for free because I truly love this. I truly want you guys to win. Let's see if we can get my my charts back up here. Why is it doing that? It's just not loading it. All right, well, there's going to be a buffer time here while this loads. Let's see. Why is it doing this? The Discord works. It'll show my Discord. But yeah, if you guys are in the Discord, if you're not, I'll walk you through it here. Right. So what we have is the trading patiently category. This is a ton of value. My trade recaps, analysis every day, mainly on futures because I purely trade futures. Main chat where I just answer people's questions constantly. We have other great traders in here bouncing ideas off of each other, helping each other. I forgot about this. There's daily education. I'm in here not every single day, but most days, sending doses of education. I mean, I don't know what else, like truly, not to sound rude, but I don't know what else you guys need, you know? Like, there's so much value in here. I wish I had this. Like, truly, I wish that I had something like this in the beginning of my trading. Like, it would have shortened my learning curve exponentially. Daily education, a free course walking through the model that I trade, PDFs, straight value, all for free, resource library. This is the academy right here. So this is for academy members, my students. We do live trading in there like this almost every single day. So I mean, I wish I had something like this at the beginning of my trading. Can we get back on the charts? You guys are just looking at a black screen. My OBS is bugging. Why? Finally, we got it. It just like wouldn't load it. But yeah, man. Very, very invested in all of you. You know, I'm rooting for every single one of you. I know how hard the journey is. You know, I'm so grateful to be where I am and have this understanding of price. You guys see the logic play out. You guys see, you know, the proof is in the pudding. We do these forecasts. We call price every single day using all the things that I teach you. So there really is no skepticism to be had. The proof is in the pudding. You know, we call price every single day. You guys, if you go watch back the forecast on Sunday, this was called to the T. This move right here. We mentioned we're looking for price to potentially sweep this buy side right here. And then dig lower into this bullish fair value gap to expand higher off of. Now, we're not getting our expansion at the moment. We're kind of just consolidating, which is why I said we're in no man's land right now. And we may just failure swing. But that's called on Sunday, right? So the proof is in the pudding. You know, the stuff that I'm showing you guys truly does work. And it's the most simple way of getting to that same destination as everyone else. Being able to get on side with price, have a consistent edge, call price with consistency. You know, we're calling major financial markets every single week with very high accuracy using just the things I teach you: liquidity and fair value gaps and swing points. So yeah, I wish I had this stuff early in my trading, man. It would have changed my life. But I'm grateful to be where I am. I know the journey it's all paved out by the Lord, man. I'm grateful to be where I am. I feel like I'm put here to do this. You know, I've always enjoyed helping others, be it any other topic. When I was younger in school, helping people, teaching, I've always been kind of a teacher in that sense. So I feel like that's what I'm put here to do, man. I love it. I feel so blessed to be able to do this, and I'm very invested in what you guys are doing in your growth. So I feel like it's a win-win. You know, I'm going to give so much free value to you guys, and if my channel, if my social media grows, I can just do it at a larger scale. You know, then it just allows me to be able to help more people and do it at a larger scale. So it's just a win-win for everyone. But there's just nothing to be had right now. I'm purely trading ES and AQ with this harmony model. And I mean, it's just low probability conditions, and that's the reality of focusing on one or two assets. They're going to go through these periods of consolidation and lower probability. And when that's the case, you give it some space. Like when your girlfriend's mad at you and you know you can't talk it out, you just got to give her some space, maybe buy her some dinner. Maybe she's hangry, right? So maybe indices have been hangry lately. But yeah, you just got to give it space when it's low probability. But nah, all love to my women out there. My girlfriend gets hangry. As soon as she gets mad, I'm like, all right, we're going to Panera, bro. We need to get some Panera. I get kind of, I don't really get hangry. I just get kind of like mute. But yeah. There is this 4-hour SIBI. I really don't want to see this hold because of that higher time frame narrative. You know, I would just want to see the buy side go. If we do retrace to this 4-hour SIBI, it wouldn't surprise me if we just disrespect it. But we're just in no man's land. I really don't like I said, I don't want to be a broken record for you guys. Do you think the daily fair value gap wants to fill first? It really comes down to what the order flow is saying. I can't say definitively what price wants to do right now because we very well could just failure swing. I mentioned this earlier, where we're just in no man's land of this 4-hour range. So from here, let me really elaborate on what I'm trying to say to you guys. So when I say we're in no man's land here, what I mean is let's just say we have a news driver over here. Let me mark it out. So this red line, obviously it's not red yet. This red line right here is our FOMC meeting minutes. I would argue price is waiting for this volatility injection, this news driver. Price is just waiting up for it. So when I say price is in no man's land, I'm referring to the range that we're in, the targets that we have to go higher, because from a macro perspective, I'm still bullish on indices. But right now, the only targets I see us to expand higher off of is this previous day low. And so we may just failure swing within no man's land of this range. This right here, this red line, this news driver is going to be very telling. Do we expand lower towards previous day low and then move higher off that from FOMC meeting minutes, or do we just failure swing here and create new gaps? That's why I'm saying, like, if we on ES, if we go and trade into the SIBI, I almost would just want to see it fail and then this be a failure swing and reach towards the buy side. But it's just unclear. There's no other way for me to frame it other than it's just unclear right now. It doesn't feel obvious to me what price wants to do, where it wants to move higher off of. I just know that from a macro perspective, I'm bullish towards this buy side. But when there's a big 3 news driver like that, just wait for it to bring clarity. We have 4-hour SIBI pointing lower. We have this no man's land range right here with the only discounted rate for us to head higher off of being this. So what logically makes sense to me is just failure swinging because NQ didn't reach for this. Had we taken that, I would have been gauging the reaction of this discounted rate. So if we flip here, right, if the lower time frame order flow, if the 15-minute and the 1-hour flip here, then likely we just expand off FOMC or just continue in failure swing here. And this previous day low never gets hit and this gap remains unopened. So that's the type of stuff that I mean about I wait for order flow to confirm these theses. Everything that I do is contingent on what the time frames below it are saying. So this order flow is flipping right now on the 15-minute, right? So we're not reaching for previous day low anymore to me. Had we continued bearish, then I would have been looking for NQ to reach for this previous day low and then gauging whether or not we wick and respect it to head higher off of. But we're not doing that. We're just failure swinging, which is something I mentioned earlier in the stream. We're just in no man's land, so that could be what occurs here. So from here, I'm gauging the 1-hour and the 15-minute to say, okay, well, is previous day high or previous day low our target? Is this daily gap going to remain open? Which I would argue, if the 15-minute and 1-hour flip here, that would be the case. Yes, I would say yes, it does remain open on NQ. ES has already offered fair value and delivered off that. We're just kind of messing around, or FOMC. So overall bullish, but I want to see the 15-minute and 1-hour flip and get in alignment with longs. And then your high probability trades are going to be longs in the direction of previous day high. But again, we have FOMC at 2. So hopefully all the detail I just went in there for you guys made sense. It's all about asking yourself, okay, what is the daily target? Where is the daily candle likely to expand? Cool. Is the 1 hour, 4 hour, 15 minute, are they confirming the idea of expanding there? What do I mean by that? I mean, are the 15 minute and 1 hour fair value gaps pointing towards the target on the daily? Okay. You guys get what I'm trying to say here? So if we're targeting previous day high on the daily and we're expecting bullish intention from the daily expansion, right? We're expecting a bullish daily candle, right? If this is our target, when we drop into the 15 minute and 1 hour, we should see fair value gaps pointing towards that. We should see the order flow confirming that thesis. But what do we have right now? Bearish 1 hour order flow. So right now it's not confirming that thesis towards previous day high yet. The 15 minute might be flipping here, and this could be the start of that domino effect where the 15 minute flips and we head higher, and then the 1 hour flips, and then now we have those compass timeframes pointing towards previous day high, and longs are on the menu. From there, you'd be looking to frame longs towards this objective. So everything that we're doing is operating out of objectives. You know, where's the daily candle expanding to? What's the objective for the day? How are we getting there? Are the timeframes below it confirming or denying that idea? That's like that is how I trade. That's all it is, right? So that's what it comes down to. So for me, I'm overall bullish biased, and when I say we're in no man's land, it's because from a macro perspective, I'm bullish, and the lower time frames aren't confirming going higher yet, and I don't see any discount arrays really for us to head higher off of. So it's just that's no man's land. So hopefully these rants are making sense, man. I don't want to be spouting stuff that's going to confuse you guys, but that's really how I trade. What's the daily candle targeting? Is it going to be a bullish daily candle towards previous day high or this buy side, or is it going to be a bearish daily candle towards previous day low in this BISI right here? Okay, if that's the case and we're going higher, is the 1 hour confirming that with fair value gaps pointing towards it? Is the 15 minute confirming that with fair value gaps pointing towards it? Well, right now I would argue the 15 minutes about to flip. So this red line is that FOMC. Do you stream daily? I stream daily in the Discord for Academy members. If you want to give that a try, you can do a free trial. There's a 7-day free trial where I just give you full access to the premium Discord, and then if you don't like it, just cancel it. You will not get charged. So you have my word on that. You will not get charged if you cancel within the 7 days, and if you do get charged and you didn't want to be charged, I'll just refund you. That's happened to multiple people where they have the free trial, they end up getting charged and they didn't want to, and I just refund them. You know, I'm not in the business of taking people's money that don't want to pay for education, right? If you don't want to pay for it, just don't, you know. I'm not forcing you to do anything you don't want to do. The Academy is for people that want to pay for a shortened learning curve, that want to pay for education and be mentored by me, right? Much more directly. But I'm not going to force anyone to do that, you know? So if you do the free trial, cancel within 7 days, you will not get charged. And if you do get charged after the 7 days and you didn't want to, you have my word, I will refund you. I refund everyone. That's happened multiple times with people as well. I'll always refund. I'm not in the business of taking people's money. I strongly believe in karma. I strongly believe in the Lord. I think you get what you give. I'm here to teach, provide real value. I'm not here to, you know, take people's money for no reason. But yeah, the Academy is a no-brainer. At least the free trial is a no-brainer, man, because you can just try it out and then cancel. So I live trade in the Academy Discord pretty much daily, assuming that I don't have, you know, things going on with my life or something really serious or anything like that. I'm pretty much live every day. So we do have the 15-minute flipping here, right? This would be qualified as an order flow flip. It's low probability. Why is this a low probability order flow flip? We're not trading off of any discount array. It's just a failure swing. You know, this previous candle low, I think my I don't know if my OBS just disconnected or what just happened there. I think we're good. It just lagged for a second. I actually switched my internet. I got better internet. We got a better router. But this is really just a failure swing on the 4 hour. The 15-minute and 1 hour flipping here and then price wanting to head higher, that aligns with my narrative. That aligns with my expectations from price for the rest of the week, right? So because we're bullish on the macro perspective. ES has already delivered into the daily BISI and is respecting it. And so it makes a lot of sense to me for this daily gap to get left open on NQ. That's why I was saying, if we want to take this previous candle low on NQ, I want to see if we respect that and head higher off of that, because to me that makes the most sense. So it's always just if this then that, build a thesis, price either confirms or denies it. But this model is very much flowing with price action. Moving in harmony with price. I want to see ES and NQ move in harmony with each other. Hence the name. Still very low probability stuff. I'm really not interested in putting on risk prior to FOMC, and the main reason for that is just because we don't have the 1 hour agreeing. We don't have the 15-minute agreeing yet. We don't have the clearest of draws. It doesn't feel obvious what price wants to do. We're in no man's land. So all of these things are like red flags that add up. The more arguments you can make against the trade idea, the lower probability it is. And so your highest probability trades, it's going to feel like you can't make an argument for the opposing side of the market. If this 15-minute doesn't flip and we just trade lower, then maybe NQ wants previous day low, right? So this is what I mean by reacting to price action. Let's see if we even create this BISI here. Just very low probability stuff, in my opinion. We're failing to create this BISI. There's SMT at these highs. Perhaps previous day low as target on NQ, and then let's see if we expand off of that. Here's your order block that was created. The SMT is so key, man. It is so key with ES and NQ. I'm telling you, it's always there in high probability trades. So, what are we seeing? The 15-minute is not flipping. The 15-minute has not flipped. The 1 hour is still bearish. So everything is still pointing lower. If that's the case, if all of these compass timeframes are pointing lower, we ask ourselves, what is the objective? What is the next discount rate price can target? Well, in my opinion, that would be previous day low on NQ. And then from there, we can see if price wants to sweep that or not. So do you see how I'm reacting to the order flow and to the price action? If we begin to flip, 15-minute, 1 hour begin to point higher, we likely just failure swing there, and then we target previous day high. 15-minute has not flipped, 1 hour still pointing lower. We're likely targeting previous day low. But we're just operating within this no man's land range. It'll feel a lot more obvious at other times. All right. Just consolidation, man. I don't think we're going to get anything worth putting risk on for, unfortunately. I feel like every time I go live, it's chop, bro. And if you really zoom out and look at this for what it is, we're just still operating within a range. The question is, do we want a failure swing on this 4-hour leg? Or do we want to sweep previous day low and go higher off that? Because from a macro perspective, again, I am still bullish. We'll just wait for FOMC. That's what it comes down to. Let FOMC provide the clarity. 22090. 22090. Interesting. Why 22090? I'm just curious. Is that the... Yeah, why 22090? If anything, I would say my eyes, if we're gonna go higher off of an area, would be the low of this candle. 22103 for me. That's the next discount array if we don't just failure swing. But because I'm long biased and I'm expecting price to want to reach higher rest of week, we either failure swing and order flow flips, or in my opinion, we trade previous day low and then order flow flips. Those are the two scenarios I'm looking for right now. Fair value gap. Which fair value gap? $22090. We'll see what happens in the shop, though. Those are the two scenarios I'm looking for. We either failure swing into order flow flips on the 15-minute and 1 hour, and then longs are on menu. Or we trade a previous day low and then flip from there. But, 1 hour. I do not see that. It's a GG. Like, just no man's land, bro. This is straight no man's land. It's not ideal to see. We have the 4-hour Sibi up here of that leg. Yeah, it's a good start, man. I want to keep growing the family. It'll be nice to have hundreds of people in here. That's the goal in the future. You're pulling a... Yeah, I don't pull fair value guys from the left. I only focus on the current price action because, in my opinion, how I subscribe to price, that is where the orders will be mitigated. That is where price will find its support. You know, I'm only focused on the current price action and legs in price. So on the daily, just to walk you guys through what I mean, I'm not focused on anything over here. You know, if I wanted to, I could trade without this. You know, the only thing that's useful from over there to me is the liquidity targets. I could trade like this and be fine. The liquidity is the only thing that I'll pull from the left, and I never trade off of it. I just use it as targets. So this leg from here to here is what I'm focused on. how is price going to deliver higher from this leg, the most recent leg. That's what I teach my students. That's how I subscribe to price. I believe that is the most effective way to do it, because that's where orders will be mitigated. So like this leg right here, or no man's land of this full leg, this fractal right here, we have a SIBI right there. Price can draw to. Your harmony model has completely changed the way I enter the market. Thanks wholeheartedly. I love that. That's awesome. I love those comments, man. Appreciate you saying that. I'm happy you got value from it, man. It's just reps. I would highly, highly encourage you to backtest it. Get the reps. Get very, very familiar with the model. Know it like the back of your hand. Iron out all your creases. And then from there, it's literally just rinse and repeat, because that model's gonna repeat every day. It's just about keeping yourself in check, Mr. Wolcott. Keep yourself in check, execute on the model, manage your risk. Get the reps in. That's all you need though, for real. The way that we view price, the things that we do, man, it truly is all that you need. Truly is. Marius, what's up, bro? How you doing, bro? I hope everything's going well. Yeah, I'm doing great, man. I can never complain. Look at oil. I talked about oil earlier, if you want to go scroll back in the stream. Oil is very low probability. In my opinion, there's nothing here that I would be interested in putting risk on for. I mean, I am not trading anything outside of ES and NQ, but if I was looking at other asset classes, oil would not have my eyes. Can we get this flip of order flow? If that's the case, we likely just failure swing and head higher off that. I actually want to see this SIBI fail, and then us straight towards buy side objectives rest of the week. If we do reach for this and tag it prior to FOMC, we probably just respect it at the moment and then eventually move higher. That's what I would be expecting. There's nothing to be had today. Price is just waiting up for FOMC. I don't even know if I'm gonna look at the charts for another hour. I don't think it's worth it. I don't see myself getting any model. If we got new fair value gaps, higher potential longs towards the 4-hour SIBI makes sense to me. But that's about it. And I just don't like where we're at again. Like a nice expansion here. And then bullish fair value gaps up here. Could frame at 15 minutes or 1 minute long towards this 4-hour SIBI, but that's really all I see that could be on the table. I'm expecting this to stay open. I really am. I think that this will be a bag. I don't see this getting traded to at this point. If we were gonna go higher off something, I would have wanted to see it do, respect previous day low, trade off previous day low to head higher. But the way that the order flow may flip here leads me to say we likely just failure swing. Then we'll see how we react from this 4-hour SIBI. What we could see prior to FOMC is just a respect of it, and then eventually we work through. This type of price action is indicative of waiting up. Like it's almost like Price has a stop sign in front of it right now, and they're just saying to wait. You know, the markets tend to hold up for these big 3 news events. This is what I mean by hold up. Consolidate, not follow through in any direction, not hit any targets, just kind of chop around in no man's land. Been a long time grinding each and every day. That's all it is, man. 1% every single day. You know, reverse engineer your issues, your flaws, see how they reflect into your trading, and then make the trading personal to you. That's all it takes. And it's just rinse and repeat. I got some questions about why my futures charts look different. I have contract adjustment on. You can't really see it because my camera's in the way, but in the bottom right, B-Edge, contract adjustment on. I keep set off. B-Edge set. See how it's blue? I have contract adjustment on and then set off. I got a couple questions about that. All right, yes. Can we expand through these highs and get new fair value gaps pointing higher? This looks like the start of a flip. It really does. Reaching for this SIBI. Nice push. Very nice expansion on the 15-minute. This is what you want to see from that second candle to create potentially a fair value gap to the upside. We've already targeted our SIBI. That's crazy. Did we hit that high? We did. We just hit it to the tick. Low probability, man. What we're likely going to see now that that SIBI has been tagged, right? We just offered fair value on the 4-hour. Because we're waiting for that 2 p.m. news driver, we're just going to mess around. These are just very, very low probability signatures. If we had more room to target that SIBI up here, that would have been a nice trade, potentially. I could have set up. But I needed a narrative PD rate to long off of. What would have been really nice, that I would have liked to see, is NQ sweep previous day low right here. This was our objective potentially that we were looking to target if the 15-minute continued lower, right? So it had NQ swept this previous day low and then ES SMT'd here. Longs would have been really nice off that. Could have been really nice longs. But they're both failure swinging right now. This should go. I want to see this go. Not necessarily at this moment because we just stung into the 4-hour SIBI, but within the next day, throughout this week, I want to see these highs go and this buy side objective get hit. I'm still bullish. Do you guys understand why I've been submitting to that bullish bias? It's because of the macro perspective, because of the higher time frame. The daily's pointing higher. The weekly's pointing higher, although it's consolidation and sloppy. The monthly is always going to be an uptrend. You know, you want to see indices continue to go higher. These markets are made to go up. Now that we've offered fair value of this leg, do we respect the SIBI and just kind of mess around until 2 p.m.? That's what I would expect. If not, perhaps we just expand through it and flip. Those are the two scenarios I'd be looking for, but ultimately I want to see the SIBI get invalidated at some point today because I want to see the buy side go. If we flip through this, for those of you that trade PM session, I don't. But if we flip through this and then get 15-minute gaps through after FOMC, it could be nice longs towards that buy side. We'll see what happens though, because we very well could just respect this and work back into this range and mess around. I'll put this on the lower time frame so we can see it clear. That gray box is our 4-hour SIBI. What's up, brother? How you doing? How you doing? I got to bed way too late last night because I was setting up a new router. It took longer than expected. I don't really see a point in me staring at these charts for the next 45 minutes. I'm not going to get anything from here. Still overall macro perspective bullish. We'll see what FOMC brings in terms of clarity. These buy side objectives are what I'm looking for, right? A very, very ugly daily buy model. It's all-time highs as my overall objective. And so now we're in this 4-hour SIBI with FOMC in, 3 hours, 4 hours. 3 hours from now. So lackluster type of day, unfortunately, but this is what tends to happen when you have FOMC in the afternoon, when you have a big 3 news driver prices waiting for. Dollar has yet to flip. I would be looking for this area for value. Once we tag that, I want to see dollar flip. So I want to see this tag and then a clear flip of order flow here. I mean, this structure, this looks like it's going to set up a gorgeous sell model. If we can get something like this, I mean, that's gorgeous. A+ textbook sell model. If dollar respects this area for value on the daily, which would be confirmed by that 1 hour order flow flip. If we tag into this area here and then the 1 hour does what I just expected there, beautiful, beautiful. I would love to see that. And then it's just straight sell side of the curve. And then you put your eyes on majors. Then you put your eyes on majors right here. You have all the sell side of the curve once that order flow flips. Would love to see that. That would be very nice. So this fair value area, if we get that order flow flip confirming that we're respecting it, this fair value area to this low is a high probability trading condition that you want to be operating in. If this order flow flips on the 1 hour and we begin to respect premium arrays, this is high probability trading conditions until this low goes and you have clarity on dollar. Of course, we need to see order flow confirm that on the 1 hour. So we need to see a strong reaction out of the area for value and then a flip of order flow. So we need to see the order flow state change. But in terms of structure, this is just really nice. Would love to see that. SIBI causing a reaction here after that. retracement. I really do appreciate the stream. When I stay out of low probability, I do better. It's good for me to have that voice of guidance in the background to keep me at bay. Exactly, man. That's what the academy is for as well, and in the live trading streams. I love that. You know, when you have someone hammering these good habits and good tendencies into your trading, they become, you know, just second nature. And so being able to identify low probability and sit out of it, you know, point at it and say, this right here, this is, I know that this is a low probability trading condition and I'm not interested in it. That is a extremely powerful skill set to have. And so that's my goal with the people that learn from me, my students in the academy, is to build those habits, you know, so they become second nature. The presence of fair value gaps, the presence of intention, clarity, and price action. When we have context, like what I just taught you guys in the stream, when we have these areas of high probability trading conditions, that's when you want to be putting on risk and you know, really looking for trade ideas. When there's a lack of fair value gaps, when there's a lack of context and intention from price action, you want to be able to identify that and sit out of it, because that's what's going to protect your capital and increase your strike rate. So let's see if we end up getting a reaction out of this area of fair value on dollar throughout the day. And we still have FOMC. We have this leg that is going to be very telling. We want to see price begin to flip from the area of fair value on dollar and continue lower. That would be beautiful. So we'll see if that ends up occurring. It's going to take time. Obviously, that's going to have to happen on the 1 hour, but that would be my expectation. I'm long today, weekly SFT. Yeah, I'm bullish biased as well. Still expecting higher prices on indices. Overall, we do have the 4-hour SIBI. I eventually want to see that get invalidated. But I think price is just kind of holding up for FOMC later. Weekly SMT, 5-minute SMT, ES, 5-minute was the real OB. This low right here. What do we see with the fair value gaps? What does a high probability order block do? Create a fair value gap. What do we get here? Our order flow flip. I would actually argue this right here is the order flow flip on the creation of the OB. What do we have right here? Confirming that low. Coincidence? I don't think so. It's always there. It really is. The deeper relationship I've built with SMT, the more I've come to like it. For those of you that have been following me for years, I wasn't the biggest SMT guy, not because I didn't think it worked, but because I just didn't feel like I needed it. But because I'm trading ES and NQ, wait, why am I looking at dollar, bro? I'm bugging. I completely thought I was looking at NQ. Let's see if it's there on NQ. But the more that I use SMT, the more I see it's there. Okay, it wasn't there here on these lows on the 5-minute. The dollar and indices are correlated as well, but they're inversely correlated. But whenever there's a high probability trade idea on ES and NQ, SMT is there majority of the time, and it raises your strike rate. And the more that I've come to understand SMT and build a deeper relationship with it, the more I like it. So like, yeah, there's SMT at these lows. I'm assuming that's what you mean. This gave me a bullish bias that entire week. This sweep right here, when we swept previous week low, and we had SMT with ES, I was bullish this entire week. So this type of stuff is always there at these external and internal ranges of the ranges. I don't use quarterly theory. I don't feel like it's necessary. I just worry about the way the candles print. If you understand the way the 1 hour and 4 hour candles print, it's essentially just using macros, quarterly theory, all of those things. I don't need to overindulge myself in a bunch of concepts, you know. But I if it works for you, absolutely. It's kind of baked into what I do. So understanding the 4 hour candle and the delivery of it, when I use time, I'm operating within New York, and then I'm understanding the 1 hour and 4 hour candle closes and delivery, the way that these candles print. You know, when you do that, you're essentially using macros. SMT has been an absolute game changer. The key is to remain extremely patient. It is, yeah, it's a game changer. It really is. I've always believed in SMT in the way that it works, because it's there, and in high probability trading conditions, it's almost always there. But for a while, I just wasn't using it because I didn't feel like I used it, or I didn't feel like I needed to use it. But with ES and NQ, and with the model, because I want to be purely trading ES and NQ, it's so powerful between them. It is so useful within ES and NQ specifically. You know, I've back tested this. I've seen this with my eyes, operating internal and external, and then looking for SMT to confirm it. It's always there in these high probability setups. Internal on the S&P, right? SMT with NQ. I want to see this be a breakaway gap. There's SMT at this gap. I want to see previous day high go. Now that we're flipping on the 15-minute, that's the start of the 1 hour, in my opinion, flipping here. And ultimately, I would like to see that get invalidated. You know, we might, like I said multiple times now, mess around prior to FOMC at 2 p.m., but I ultimately want to see buy side go. So for those of you that are invested in trading ES and NQ, you guys know my bias moving forward for the rest of the week. That's pretty much it, though. I will be live. I posted the weekly schedule. Let me actually look at it so I don't say anything incorrectly. Let's hop into the Discord. I'll show you the schedule. I'm going to be posting the weekly schedules in the Discord every single Monday going forward, so you guys know exactly what day I'm going to be live on YouTube. You guys know what day I'm doing live back testing sessions, weekly classes, whatever it is in the Discord. You guys know for my Academy members and students what days I'm live trading in the Discord for the Premium Academy. All of that will be on this weekly schedule, posted every single Monday moving forward. So we're going to get a lot more meticulous with how we do things and intentional. So I'm really excited for it. Excited to just give you guys value on top of value, and watch you guys grow with the stuff that I teach. So that's pretty much it. We will be live tomorrow for the Academy members and Friday. And then we'll have our weekly forecast on Sunday live on YouTube. So I hope you guys enjoyed the stream. There really wasn't much to be had today, in my opinion. Is your backbone URL and IRL? Absolutely. Yeah. Liquidity and fair value. Everything that I do is based off of swing points and fair value gaps. How can I join the Academy? There's a link right here I'll send. You can start a free trial like I talked about previously. If you don't like it, you can cancel within 7 days. You will not get charged. You can test it out completely free. For those that do join the Academy, they get the full course I made called Profitability Unlocked free. And it's just a no-brainer, man. If you don't like it, you know, just cancel. You know, I talked about it prior in the stream, but yeah, it's literally a no-brainer. So you can check it out there. Hope you guys all have a good rest of your day, man. And I can't wait to watch you guys grow. I love this. I'm so blessed to do this every day. And yeah, I'll see you guys in the